Hello traders, how are you? Vladimir Ribakov here from Traders Academy Club, and welcome to the Forex weekly review for the week starting on 4th of March until the 9th of March. First of all, I would like to thank you very much for finding the time by watching the video I'm about to share with you. I really appreciate that. If you enjoy the video and you enjoy the charts, the analysis and the trading setups I'm about to share with you, please show your support by hitting the like button and leaving your feedback below. Your support back is very much appreciated. Your feedback, my motivation to keep bringing the things I do for you and keep sharing with you my knowledge I have in the trading world. So once again, thank you for your time. Your support is very much appreciated, and let's begin. Previous week was one of the most interesting weeks recently. Many pairs were amazingly technical and followed the exact plan. Some of the pairs, mainly the Canadians pairs, did not. The way it looks, the market is providing us some amazing opportunities for the coming week and for the coming period. And I'm not talking only about the Forex market, I'm talking about the markets in general. For those of you who followed me on the recent weeks, you know my view about shorting, selling big time the oil, the indices like the DAX was one of my favorites, like the FTSE, like the Dow Jones, etc., etc. They paid and they pay big time, and the way it looks, many other instruments are about to provide us amazing opportunities for this week and the weeks to come. So let's begin. One of the first things I have on the list is the euro dollar, and this is the time to mention that you have to remember that this Sunday we have the elections in Italy, which means the euro dollar and all the euro pairs and the entire market in general could be affected by its result and by the speculations how it will affect the entire eurozone. So what I'm about to share here on the euro dollar is purely technical. Please note there is a possibility and probability that due to the elections the moves could be less technical, at least on the immediate reaction. So I will try to figure out, I will try to explain how you can figure out the entry points and the setups on the easiest way. The first thing is we were shorting the euro dollar. We were hunting for the 125, 126 zone. Once we got it right on this place with the false break, we started to expect at least a short-term retrace of the downside, and we got it. So the euro dollar behaving by far beautifully. The thing is here that it was just a false break below the previous low. So one of the things in such scenarios that could happen is that a range might start and get developed. As per the cycles from the weekly chart, we should be able to see the euro dollar going back to this area, and that could start and get developed in this way, or maybe by trying and create a new high first of all. In order to try to get a clearer picture, we drop down to the 4-hour chart, and in the 4-hour chart we can see that obviously, right, we had a false break right here, and then we had this false break. Now note that these were two beautiful legs to the downside. We follow that by the bullish divergence, and now we have this trendline breakout. So theoretically, as long as this low holds, euro dollar could go and start regain some momentum back towards the previous highs. But there is also one sign that we have to pay attention to: these highs that were respected several times in the row, and the fact that it tries to build a bearish hidden divergence. So if the euro dollar, especially after the elections, will refuse to break for new highs and continue to gain momentum, this could be the continuation level. So we need to start looking for the evidences in that case. The best way to do so is to drop to lower time frames and start to follow up there for false breaks. So like fake highs, fake new highs to be created, or lower lows, lower highs patterns, and then look to sell rallies with bearish divergences on the direction with the momentum basically to the downside. So in other words, as long as we respect this area and the action zone, if we do not see the euro dollar breaking to the upside, that could be a very serious sign for continuation to the downside, and then we could start thinking about very deep continuation such as 120 or maybe even lower. If it does break above, then the next levels to the long should be these areas. That's for the euro dollar. The pound dollar looks like a very scary chart here, but let me try and clarify for you. The pound dollar is following several trend lines. The immediate one is between these spots. That's where also the bullish divergence currently start to build up and show some kind of possibilities and probabilities. The further trend line would be between these spots, and it brings us back to the 100. And of course, the biggest trend line from the fastest, the first of the spots right here brings us back to the 132. I'll try to make it very, very simple. The lower the pound dollar will go, the better it is for a long opportunity to follow later. Now, from my point of view, I would at least wait for the 136, 135 zone before dealing with the buys. And by ideal, we should get it to 132, back to the supportive zone, back to the 161.8 expansion of the cycle. Could be simply stunning if we can get it there. And on the same side, if we break above the previous trend line to the downside and successfully hold above it, we can start looking for retraces, breakouts, and further continuation to the upside. If it does happen, the possible targets to the upside could be 145, 146. And this is how it looks on the 4-hour chart. So far, it is following the beautiful trend line that it created for us on the tops. So as long as, theoretically, as long as we are below that, every rally followed by bearish hidden divergence could provide us as a sell opportunity for further levels to be achieved. That's my view for the pound dollar, and it's definitely interesting. Euro pound. The previous week we were talking about looking for the sell rallies basically, and as you can see, this is exactly what happened right on the beginning of the week. That was the place what we got. We got a bearish hidden divergence, and boom, all the way down straight to the previous lows. The thing that happened then though was a hold of the double bottom, a hold of the trend line, and a bullish divergence. Now, if we go back to the weekly chart, what can we see here? The bigger view did not change. We are still bearish inside this triple cycle, and we still expect this rally to finish and the move down to continue. In order to spot a good reaction right from there, we should be looking on a daily chart, and here it's where we can figure out that the euro pound, is trying to create here a descending triple cycle, which could be easily reflected by two bigger ones. So the way it looks right now, there are no signs on the euro pound, and basically no signs for reversal. So basically, as long as this trend line now holds, there is a great chance that the euro pound is going to the 0.90 level, or maybe even 0.91, before we will recreate the divergence here to the bearish side, break, and continue all the way further down. So the way to do that would be to go to the lower time frames, like the 4-hour chart, and as long as this trend line holds, like this, go and start to look for retraces of the action zone. So this could be the first place to look for possible buys. If we go higher, retrace to this one and look for the buys. Basically, this trend line is a great follow-up and great levels to look for. So once we get closer to that, with bullish evidences, bullish signs to start looking for the buys, we can go and continue with the current trend developing. Please note that, as I mentioned at the beginning, the situations with the Italian elections during Sunday could be very effective, and the bottom line is, do not rush into a trade just because it has a level or just because it has a trend line. look for the real evidences, real confirmations that could be Fibonacci retraces, bullish candle patterns such as engulfing, harami, such as kickers, which I love a lot, such as hammers, and then look for your further higher highs to be created to get involved in the buys. Okay, but the bottom line here is very simple. All the short-term bullish scenario is possible as long as this trend line holds. Break below that would open the doors for possible continuation down. If we note on the statistics, they support to the short-term rallies. The important days for possible tops are going to be 1 week after that, basically. So we can easily see this week behaving bullish back to the action zone on the top and completing the double wave correction. Okay, so the next one on the list is going to be the Euro Canadian. The previous week it provided us an amazing engulfing on an unbelievable area with the weekly and the daily cycles. But what I say many times is, do not marry your trading idea, meaning that if you have a trading idea and any specific level, candle pattern, or whatever it is looks like amazing, it's not a guarantee that this is going to pay. I was watching for the sells here and I was expecting a very big move down. I was clearly wrong here, but here comes the idea of the timing, which means get yourself the confirmations before you start dealing with that. And one of these ideas of the confirmation was to get a pullback and a breakout. This never happened. The euro pound retraced to the upside immediately and pretty much straight, and within a few days broke the previous high and started to create new levels, new highs, which means the sell idea was invalidated. Yeah, so the chosen direction was clearly wrong. Was there any reason to force trading in that direction? The answer is no. And here comes the art of trading. No one cares about how well you read the chart, because charting is the easiest part. Now, the question is, what do you do after you have yourself a trading idea? You have to follow it. And follow it means wait for your retraces, wait for the breakout. And by doing that, you get extra confirmation and you mainly get better chances to catch your real momentum. That's all. So by breaking this high, basically the pair continues higher. The divergence not completed currently. It's there is no tick down on the MACD. So we can see this pair dancing around these highs, or maybe even reaching further towards like 162 or maybe even higher. Where from, I still am pretty much sure we are going to face a big move down. It is going to happen. I wouldn't rush into that currently since the breakout, but if there will be no surprises from the Italian elections, there is a great chance we are going to dance here with some pullbacks from the top and maybe even see that approaching higher, which brings me back to the New Zealand Canadian, another pair I was looking to get involved with a beautiful inverted hammer and a bearish hidden divergence on a daily chart. Now, not like the EURCAD, the New Zealand Canadian did pay, and the retraces here provided a bearish hidden divergence on the lower time frame, 1 hour chart time frame, and we got a move down. This move was not too big and it was bounced here with the bullish divergence and a double bottom. That's a sign, that's a warning sign, of course, that there is a good chance for further continuation. The trend line was broken, and that basically was the time to say, let's wait for the better opportunities. What's happening now? Now, if we are watching on a daily chart and a weekly chart, the 094, 095 area, which the same area I was mentioning previously, was and remains critical. The only thing that changed was probably the timing for the shorts to begin. The view there remains the same. This is still a triple cycle developing. It could turn to be, by the way, a special cycle. It doesn't really matter how we name that. The idea is the same. It is creating the finale. So the higher we come closer to 0.94, 0.95, the better the sell would be. I would be looking for clearance above this area. That would simply be amazing if we can come here, clear some stop losses there, then mark the last trend line, boom, breakout, and we got ourselves the sell opportunity we were talking about. Another possibility to find here is if the pair refuses to break above the previous high, that could turn to be also on the first days as a double top with the bearish divergence. That could cause some problems. So the bottom line here, let it start to show us bearish evidences. It could turn to be for us a double top if we start to get some bearish signs from this moment. And by ideal, we should go higher, 0.94, cross above it. And the higher we come in between 0.94 to 0.95, it would be simply better chances for the bearish move to come right after that. And this is basically the chart we have. That's the trend line currently developing here on the 4-hour chart. Oops. So it's the critical one to start and to follow. Dollar Canadian. Now this one is a very interesting opportunity, which maybe could be the hint for what's coming with the other Canadian pairs. We have a trend line on the weekly chart. We have the double cycle developing here, bearish potential divergence developing right there. We go to the daily chart. We can see some magnet zones waiting for us right here. Magnet zones meaning few different cycles leading to the same place. This would be the best area if we can get it, 130, 131. If we manage to get it right there, that would be simply an amazing sell to come right after that. The divergence starts to develop. So what could happen on that case is short-term bounces back to the action zones here or slightly lower, where from we're gonna wait for the pair to continue higher towards 130, 135. As long as it's holding the trend line, does not break it, and does not close below that, the main momentum remains bullish for the dollar Canadian. 130, 131 could be definitely beautiful targets. Aussie dollar was moving beautiful to the downside. Now it's on the first magnet zones of two different cycles, this one and this one. Two different variations of the cycle. We have the levels right there. They are showing us basically a classical place here for the short-term reversal, but the bigger one is right here, the zone of 0.76, I would say. This is also where the trend line goes. So I would want to see the Aussie dollar slowly moving down to this area and then mark this trend line, breakout, and start talking about longs again. Gold. Now gold and silver were following exactly the same plan. Short-term push down. The question is what's going to happen from here. If we manage to go and break the trend line here and hold above it, we can start talking about retraces to the downside, break again. So basically what we want in such cases would be a breakout, a retrace in two waves, and another breakout. And this way we confirm ourselves the beginning of momentum, the pullback of the momentum, and the continuation. We immediately improve our risk reward and we get extra confirmations for possible continuation further up. That's what I would be looking to do here, but there is a very good chance that this trend line would not be broken and the gold will slowly but steadily take us further down towards 1270, 1260 before the real bullish pullback to come. So break above the trend line, two waves pullback, and we have the continuation. If it refuses to do so, there is a great chance the gold is going to continue lower. One, to possibly retest the 1300 or 1260, 1270. Keep an eye on this development, how it goes. Oil followed our plan exactly as we wanted. We got ourselves the bearish hidden divergence right here. We got ourselves the beautiful engulfing, and boom, we got paid. Basically, as long as this trend line holds, or more specifically, as long as this top holds, I would expect the oil to continue further down. as long as we do respect the trend line. If alternatively, if we go and break this trend line, break the high, we then go with the trend line to the upside. So if we does that, pullbacks and by continuation, if we manage to go above this high. Okay. Next one on the list is my favorite, the German versus the DAX. For those of you who followed on the past weeks, you should be enjoying the beautiful crush that DAX is providing. For those of you who don't, you can always go back to the videos and watch what I was talking about, what we were expecting. What I am expecting still, I'm expecting to the 38.2 or the 50 levels to be achieved, reached, wherefrom we most likely going to experience some kind of pullback, which from my point of view will represent nothing but further continuation down. Now, the reason I am looking here for sell is basically coming here with the bearish divergence, bearish convergence, was creating lower lows. On a daily chart, on the same time, we had a beautiful pullback into waves, beautiful breakout, and look at that, this paid and this paid big time. So every pullback currently I expect and suspect will take us lower to 11,700 or down to 11,500, by ideal further down towards 11,000 zone. Once this divergence completes and the MACD turns around, that would be the time for the pullbacks. But basically the bearish pressure was and remains on. I forgot one of the interesting pairs on the Forex. This is the Aussie versus the yen. I am bearish on all the yen pairs. On the previous weeks we've been talking about pound yen. 146 was reached on the pound yen, so congratulations to all of you who followed and traded the pound yen on the short. Aussie yen has for us a triple double cycle, which means as long as we are going lower lows, lower highs, I would expect continuation. There is no divergence on the weekly chart, meaning there is a great chance for a further continuation, and the level we can see there is basically surrounding the 79.80, so there is still more to go. I would be looking to go and sell pullbacks, which you can basically see better on a daily chart. We have some action zones right here around the 82. The next one we have slightly higher, 83 plus, so I would be looking for retraces and sell continuation towards 80 down to 79 level. I believe there is more to come. And one of the new interesting things I want to cover is the Facebook. In stocks, I generally don't trade for the sell direction, simply because I prefer look for the buys. Mainly because theoretically to the upside there is no limit in a pure value company. To the downside there is always the limit, right? There's zero. So that's why going long is safer when it comes to stocks and commodities. Now here I am going short because of the triple cycle which we get on the weekly chart. With the bearish divergence, and the daily basically gotten confirmed here by false breaks and here and by lower lows, creating the convergence. So the first portion which we sold in the Traders Academy Club this week was this divergence and the break of this trend line. We got paid here beautifully, and that's what I'm thinking. As long as these stop hold, every retrace up, and that could be in a view of the range, or it could be just little pullbacks in two waves here and a breakout. But every retrace up, we should be looking to sell. This would be the invalidation level. Okay. Sorry. And this is where I think that's where the Facebook comes interesting instrument to start and to follow. Cryptocurrencies, the Bitcoin, from my point of view, had the triple cycle to the downside, 1, 2, 3, and now correcting itself to the upside. So I expect the 50 level to be reached on the 4-hour chart. We can see some magnet zones if we measure this cycle as well. So if we manage to break this high, I would suspect we are going to the next level. So basically, as long as this low holds, I still think buy pullbacks is a smart thing to do. From here, it might start to be suspicious for some kind of a move down. This is one of my favorite, and this is the Ethereum versus the Bitcoin. We had a beautiful movement here, kind of straight movement to the upside, which could be theoretically broken into triple cycle here with a double cycle pullback correction. This is a critical level, the zone of 00720 30 down to 006. The way it looks, once we are establishing the bullish divergence here, we are about to get a monster there. So the way to deal with that is to drop lower. It's currently clearing and cleaning this area. I want to see that as lower as possible, go above this trend line, get ourselves pullbacks and buy. And of course, the big trend line breakout would be even a better, safer continuation call. So that's all, guys. Once again, thank you very much for watching this video. I hope you enjoyed it. I hope I shared with you some interesting knowledge and some beneficial directions, instruments, and setups, trading setups for you, that I gave you the ideas you were looking for. If there isn't any specific instruments that you would like me to go and cover for you, just write down on a feedback your request. Vlad, please cover this and this. Hit the like button. Show your support back, please, by some good feedback. As I said, and this is real, your feedback, your support back is the motivation of my own and my team to keep working for you and bringing you the quality that we know and helping you in your trading. So once again, thank you for your time. I wish you a wonderful trading. Keep an eye on these instruments. I'm going to cover much more of the instruments in my live trading room, and I invite you, if you are still not a member, join the Traders Academy Club. We have the live trading rooms on daily basis, twice per day, covering all the instruments and all the directions we are trading and how we trade them. So don't trade alone, trade in our greatest community, and let's make it happen together. So once again, thanks for all, and I wish you a wonderful trading week and great time. Yours, Vladimir Ribakov, Traders Academy Club.
Thank you for watching. We appreciate your time. We invite you to join the #1 ranked trading club online, the Traders Academy Club, and to start trading like a real professional. Our students make amazing returns, and you can do too. Let your successful trading journey begin. Join Traders Academy Club using the link below this video now.